Hey, my Social Security family. Before we dive into today's breaking news about potential changes to SSI and SSDI payments, take a second to hit that subscribe button and notification bell. You won't want to miss any updates about your benefits, especially with all the changes happening in Congress right now. Imagine waking up to an extra $3,900 in your bank account for millions of Americans aged 62 and older who receive Social Security benefits. This dream could become reality in just 3 days. Today, we're breaking down the latest congressional action that could revolutionize Social Security payments as we know them. But what does this mean for you, and how can you make sure you don't miss out on these potential increased benefits? The halls of Congress have been buzzing with unprecedented activity as lawmakers race against time to implement what could be the most significant Social Security reform in decades. The proposed emergency measure aims to address the growing crisis of inflation and the cost of living challenges facing older Americans. And many are wondering why now and what sparked this sudden urgency in Washington. Let's rewind to understand how we got here. Over the past few years, record-breaking inflation rates have hit seniors particularly hard, with basic necessities like groceries, medications, and housing costs skyrocketing, leaving many Social Security recipients struggling to make ends meet as the current average monthly payment of $127 simply hasn't kept pace with these rising expenses. Congressional leaders finally seem to have heard these concerns loud and clear, proposing an increase that would nearly triple current payment levels for qualified recipients. You might be wondering how this massive increase is even possible. According to insiders, the funding would come from a combination of emergency appropriations and a reallocation of existing federal resources, ensuring that no American senior has to choose between buying food or paying for essential medications. What makes this initiative even more compelling is its rapid deployment. Unlike previous benefit increases that required months or even years of implementation, this program is designed to be activated within a rapid 3-day timeline, a schedule that might seem ambitious, yet sources reveal that the Social Security Administration has been quietly preparing by updating payment processing capabilities and strengthening direct deposit infrastructure. But what exactly qualifies someone for these increased payments? The primary requirements are straightforward. Recipients must be at least 62 years old and currently enrolled in either SSI or SSDI programs. However, the discussion doesn't stop there. Questions remain about those who are about to turn 62 or who have not yet applied for benefits. For individuals approaching eligibility, the timing of this potential change could be crucial. If you're turning 62 within the next month, ensuring your Social Security application is processed as quickly as possible is vital. Because while the initial rollout is scheduled for 3 days from now, late applications would still be eligible for retroactive payments once approved. Many have been asking about the verification process, and according to our sources, the Social Security Administration will use their existing database to automatically identify eligible recipients, meaning if you're already receiving SSI or SSDI benefits and meet the age requirement, no additional paperwork is needed, and the increased payments will simply appear in your account as they do now. Now, let's address some crucial questions. What happens to Medicare premiums under this new plan? Will this affect other benefits you're currently receiving? And perhaps most importantly, is this increase permanent or temporary? Current information suggests that Medicare premiums would remain unchanged in the immediate future, with other federal benefits also remaining intact since this increase is treated as a separate emergency measure. The initial authorization is set for a 12-month period, with provisions for extension based on economic conditions and program effectiveness, which adds another layer of reassurance for many beneficiaries. Turning our attention to the potential impact on the economy, critics might argue that such a significant increase could fuel inflation. Yet supporters point to evidence that increased spending power among seniors stimulates local economies, particularly benefiting small businesses through heightened customer traffic. One of the most exciting aspects of this potential change is its positive effect on multi-generational households. Many seniors help support their children and grandchildren, and this increase could provide meaningful assistance to entire families, whether through better health care, improved housing, or even support with educational expenses. In addition to these points, consider how enhanced financial stability might promote community resilience, drive local investments, and enable seniors to contribute more actively to their neighborhoods. Even though the implementation is designed to be automatic, it is crucial to ensure that your contact and payment information is up to date with the Social Security Administration. If you have moved recently or changed banks, now is the time to update your records to avoid any delays in receiving your increased benefits. Furthermore, regarding the timing of these payments, if you typically receive benefits on the third of the month, you could see the increase in your very next payment, while others will have the increase aligned with their regular schedule. The Social Security Administration has reportedly been conducting extensive stress tests on their systems to guarantee smooth processing of these larger amounts. For many beneficiaries who receive additional state supplements to their SSI payments, it is important to note that these state supplements will remain unchanged, meaning this federal increase is purely additive, a particularly significant benefit for residents in states with higher living costs. Addressing another common concern, the emergency measure is being funded separately from the traditional Social Security Trust Fund, ensuring that it will not affect the long-term solvency of the regular Social Security program. Regarding taxation, while these increased payments would likely be subject to the same tax rules as current benefits, the overall boost in net income, even after taxes, remains substantial. So it would be wise to consult a tax professional to understand the specific impact on your situation. The broader community impact could be profound as senior centers, medical facilities, and local businesses in areas with high concentrations of seniors may see increased activity, which in turn could lead to improved services, job creation, and a more robust local economy. It is also possible that additional outreach and educational initiatives will be launched to help beneficiaries fully understand these changes and maximize their benefits. While this increase represents a significant step forward, it is still important to maintain sound financial habits. Think of this opportunity as a means not only to meet immediate needs, but also to build savings or pay down existing debts, with many financial advisors recommending that recipients create a structured plan for managing these additional funds before they begin to arrive. Looking further ahead, this emergency measure could set a new precedent for how we support older Americans during economic challenges, potentially influencing future discussions about permanent Social Security reforms. For those caring for elderly parents or relatives, this increase could offer much-needed relief by helping cover in-home care costs or necessary home modifications, allowing family caregivers to potentially reduce work hours and devote more time to their loved ones. So what steps should you take right now? First, ensure that your My Social Security account is active and that all your personal and banking information is current. Second, keep a close eye on your bank account or regular benefit delivery method for any changes. And third, stay informed by monitoring announcements from the Social Security Administration regarding further implementation details. While this news is undeniably exciting, it is important to wait for official confirmation from the administration before making any major financial decisions. We are committed to providing you with accurate, timely information about your Social Security benefits, so please follow our channel for the latest updates. To recap the key points, potential payments of $3,900 monthly, a rapid 3-day implementation period, automatic enrollment for qualified recipients, and no impact on other benefits. This could be a game changer for millions of American seniors. Don't forget to like this video, and subscribe to our channel for the most current Social Security news and information. Hit that notification bell to ensure you never miss any breaking updates about these potential increased payments. And drop a comment below to share how this change might impact your life. We read every comment and truly value feedback from our Social Security family. Stay tuned for our next video where we will delve even deeper into strategies for maximizing these potential new benefits. Until then, take care and keep an eye on your account. Change could be arriving sooner than you think. Remember to subscribe for daily Social Security updates and breaking news, because your financial future matters to us, and we are here to guide you through these transformative times with in-depth insights, expert analysis, and ongoing community support.